This is a Gatto Consulting production. Strategy for Action, Financial Projections. It's time to build the financial projections. We'll do it per month, and we will have as much line detail as needed. Way more than this, actually, and we will make projections a few years out. The projections will incorporate the opportunities being pursued. At this point, each opportunity should have its own P&L, built at the time of the ROI analysis. Yet, we will introduce some calibrating techniques to make sure that you're not flying too close to the sun, in terms of the total addressable markets, their growth, and the market shares that you can obtain. Additionally, and depending on your organizational structure, we may have to do projections for more than one division or business unit, and then consolidate them. As we go down into the details of these projections, we will identify the need to add a couple more projects or tasks that we had not thought about before, to enable some of the opportunities and initiatives. Financial projections are a natural part of a strategic plan, and they will set numeric goals that you can track. Dr. Lisa Su has been at the top of AMD since late 2014. AMD does an Analyst Day every couple of years to share their strategy and provide financial projections for the next few years.
So in 2017, at our Analyst Day, we set out a model which at the time some asked whether it was a bit aggressive. It was double-digit annual revenue growth. It was gross margins at about 40 to 44%. We were about 30% margin in 2015. And it was about increasing profitability and cash. And I'm happy to say, if you look at the numbers for 2019, we've more or less met these goals. In some cases, we've exceeded these goals. For our long-term model that we're going to talk about today, we believe we can accelerate growth. We believe that growth will accelerate. We believe we can deliver approximately 20% compound annual growth rate over that time frame. We see margins increasing from where we ended 2019, approximately 43%, to greater than 50%. We think operating margins are in the mid-20s, and again, our goal is to generate a significant amount of cash.
She executed across the board toward 2017 projections and provided more guidance for the next years. Here's she now at AMD Analyst Day back in June 2022.
AMD, together we advance.
Please welcome AMD Chair and Chief Executive Officer, Dr. Lisa Su.
Good afternoon. I'm excited to share with you. I'll talk a bit about our strategy and where are we investing and where we see the market going. And then, of course, we'll cover the long-term financial model and how that all comes together. So much has happened over the last 2 years. Here, and looked at 2019, we were less than a $7 billion company. We've grown at 56% CAGR over the last couple of years, and on an organic basis only, we achieved over $16 billion of revenue last year. We were able to expand margins, expand both gross and operating margins. We were able to significantly improve profitability, and we're now generating a lot of cash. Now let's turn to our financial model. It's a ambitious financial model, and Devinder's going to go through all of the details, but I wanted to give you a preview of what we see. At the top line, we can drive approximately 20% CAGR over the next 3 to 4 years. From a margin standpoint, we believe that we can get the mix of the business to over 50% in data center embedded, and that drives margin expansion to greater than 57%. From an operating margin standpoint, that translates into mid-30s. And then from a free cash flow margin standpoint, we believe we'll be over 25%.
She did it again, and doubled down again for the future. AMD also puts a lot of effort into the quality of their financial model to make sure their numbers can and will be achieved. Here's their CFO, Devinder Kumar, as he closes his presentation in June 2022.
So if I look at it from an overall standpoint, we have delivered what we said in each of our financial end days in 2017 and 2020. Really an outstanding financial trajectory. We are focused on continuing our momentum with strong revenue growth, start with the top line, and margin expansion, getting value for the products that we deliver to our customers. We plan to be very disciplined from a capital allocation standpoint. And let me end with a personal perspective that I have. I've been with this company almost 38 years. Almost 38 years. I started way back in 1984. We are a completely different company. Completely different company. Our markets are the biggest they've ever been. The biggest they've ever been. Our products and roadmaps are the best we've ever had. The best we've ever had. We've executed consistently for the last multiple number of years. And from my standpoint, we have the strongest financial model in the history of the company. Strongest financial model in the history of the company. Thank you very much.
Even if you're not a public company having to speak with analysts, you likely have to talk with banks and investors as you seek their help in funding some of your growth. But you need to establish a track record of credibility, one that you can get by having a great financial model backed by quality strategic work and execution that walks the talk. The kind of execution that gives back to banks and investors the returns that they expect. When you do a detailed strategic work, as by using our framework, when you engage your best people, when you, while being ambitious, are also self-aware of your real possibilities, your projections will become that much better. And you establish your company as one that commits and executes the plan, and therefore can be banked on based on your financial projections. There's a lot of strategy work behind AMD's outlooks, and you can clearly sense that by listening to Dr. Lisa Su's presentations in both analyst days, talking about concepts that are really the same as the ones we've been discussing. She talks about market trends, market shares, opportunities. She talks about the $300 billion TAM. She talks about vision, product diversification, differentiation, positioning, organic growth, and M&A. And she talks about initiatives. They call them strategic pillars. And then she talks about meaning, culture, their financial model, and execution. They take a lot of pride in their financial model because they put a lot of effort into it, as you could probably tell by Devinder Kumar's words, AMD CFO. And on top of that, their execution is just tremendous. We'll talk about execution on our next video. So what happens when all of that happens? Well, AMD was worth as much as $13 billion in 2005. But by the time Lisa Su came to power in October 2014, the market cap was down to $2 billion, a small cap really. 7 years later, at the end of 2022, it passed $187 billion. And it has breached $200 billion a couple of times already in 2023. Wow. When you do great strategic work, coupled with a great financial model, you can count on your financials not just to help you set the pace for action, but also to add value by turning investors and bankers to your side. Moving on, we'll also build projections for other cash flows, including CapEx, of course. We will build a projected balance sheet and look at your capital structure. We will work with you in determining the most appropriate capital allocation and, if need be, work with you regarding the funding needed for your projects or in restructuring your balance sheet. And these things will take some getting done. Valuation is always an interesting part. We will determine a discounted cash flow valuation, and we will create some alternative scenarios, changing a number of variables according to the assumptions of each single scenario. Or we can do sensitivity analysis, measuring the effects of changing just a couple of variables, say price and market share, for instance. This also contributes to calibration. And we will compare the DCF valuation with that of available market multiples like price to earnings, EBITDA, or sales. And we will finally compare it further to a valuation in the style of value investing as taught by Columbia Business School in its masters, Benjamin Grant, David Dodd, and recently Bruce Greenwald. We will compare an asset-based valuation to the value and returns provided by earnings power and growth. By the way, you must do this to any acquisition target. Then, we will set up control processes to keep track of long-term goals, but also KPIs on the market, and things like customer net promoter score, learning, employee NPS, operational efficiency, and others. Importantly, you need to keep track of the progress you're making towards the skills and critical success factors that make your core competencies and enable your competitive advantage. If you remember, when strategizing, we said we might want to circle back to long-term goals. In the original version of the 7S's framework, they were called superordinate goals, defined as goals of a higher order, your most important goals. The work done in long-term financials can serve as a starting point indicating what seems to be possible. Some numbers will become top of mind, like sales volume, market share, or level of profitability. But let's not think in terms of possibilities. From a long-term perspective, it's okay to stretch some things a little, as long as it's not a completely outrageous push. Some people call these stretch goals big, hairy, audacious goals, BHAG. Remember, superordinate goals, along with the rest of the strategy, provide meaning. So there's no point in making them crazy. What you want is to get people excited and engaged. These important ambitions should be readily and often communicated. The best practices suggest them to be succinct and followed by some imagery that converts what might be stretched goals into a vision of what it might look like to achieve them. So now you know what you want to do. You know the financial implications and you have your resources lined up. You know it can be made to work and you want to communicate it to all of those involved. In fact, you probably can't wait to do so. So let's get ready to put it in action on the next and final video of this series. Before we go, a reminder to go to the toolset page of our website. It has all the tools that support this video and will allow you to implement the framework. www.strategyforaction.com/toolset. This is a Gatto Consulting production. I hope you enjoyed this video. If you did, please subscribe. There are plenty of new videos coming up.